Hey everybody, Dave Penyuk of Revenue.com coming at you with an exciting Canada Day video. Happy Canada Day to everyone out there watching this video. Today I want to talk about the power of getting in on a solid real estate deal and not waiting for that perfect deal. And the reason that I say that it's important to get in just on a good deal, doesn't have to be a fantastic one, as I'm going to show you in a second here, is we just sold a property of ours that we'd owned for about 6 years. And when we bought it, it was a good solid single or a double. You know, it wasn't a home run. It wasn't this amazing cash flowing, appreciating wonder kid. It was actually just a good solid deal. So what I'm going to show you is just how important it is to find, if the fundamentals are right, find a good property. It doesn't have to be a great property or a great deal, but find a good property when the fundamentals are right. Buy that sucker and then let it ride and let the time earn the money for you, basically. So that's what I want to quickly point out. So this is an actual deal we just sold. We closed on it yesterday, actually. So the price 6 years ago was $274,000. It's a buy and hold property, up-down suite, so a family home with a basement suite. And I'm not going to get into all the details, but I just want to show you the power of buying real estate just on a good property and waiting to let it do its job. Bought it for $274,000. We sold it yesterday for $344,000. We did sell it to the tenant, so there was no commissions, which is fantastic, a private sale, so we made even more money. $274,000, $344,000, that appreciated $70,000 over the last 6 years, which is good. It's not absolutely crazy amazing. We've certainly seen much higher appreciation. The mortgage pay down because we had tenants in there paying their rent every month, and we paid off $33,000 in that mortgage over the 6 years. We also had a little bit of cash flow. Again, it wasn't your home run deal. It was about $200 a month, give or take, of cash flow. Over the 6 years, that's $15,000 in cash flow. All in, that's $118,000 of total profits that were built into that good deal, not fantastic deal. $118,000, fantastic. So this is the cool part, or one of the cool parts. We actually only put about $10,000 down into this of our own money. Because we had borrowed property. We refinanced another property we had that had gone up, and we put most of the money down from that other property. So we only had about $10,000 of our own cash that we had to put into this deal. So let's look at the ROI, your return on our $10,000 investment. This is pretty crazy. Over 6 years, the $10,000 that we put in, the $70,000 of appreciation, is a 700% ROI over 6 years. That's total. You divide that by 6 years, 117%. We do the same thing for mortgage paydown, 330%, annually 55%. Of course, this isn't compounded, it's just the average. And then with the cash flow, 150%, and still 25% annual ROI on our $10,000. And this is wild. 1,180% total ROI when you add these up, this up, on our $10,000 investment. That's 197% per year. So find a mutual fund or a stock or a GIC or something else that can do that kind of ROI. And this was just a good deal. Now, we were fortunate because we had another property and we used the funds from that other property, but my whole point of this is getting into real estate, and as long as it's going to cash flow and as long as it's in a good solid area and the fundamentals are strong, this is a pretty attainable goal for yourself. So I encourage you to take action, do your research, and get out there and make some good decisions with real estate. Take care.